All right, guys, in this video, I'll be teaching you guys everything about supply and demand trading strategy. Now, I'm not just going to stop by, of course, teaching you guys supply and demand, but I want to show you guys how you can have better result trading supply demand strategy, how you can increase your win rate trading supply demand strategy. So if supply and demand is your own trading strategy, I'm here to help you refine it so that you have better performance, better result from the market. And of course, if you are new to the concept, I'm here to teach you everything so that you can make supply and demand your own trading strategy. And without wasting much of your time, guys, let's dive into it. Now, this video will be practical oriented. On my chart here, I have marked out different zones in the market, all right? And of course, these are demand zones. So the first thing I'm going to do is teach you guys what supply and demand is all about so that you understand it. Then I'll be back to this place for, of course, practical illustration. And then I'm going to walk you guys through how to get a better win rate, how to get a better result. Because if you take a look, there are some areas that I have marked on this chart that the market never came back to. So a lot of people that will be waiting for market to get to somewhere here, we miss a lot of move in the market. Now, the best way to explain supply and demand is identifying them by zones in the market. I'm going to show you guys an example, okay? Now, we have supply zone, we have demand zone. Let me just draw it like this, all right? So this should be demand zone, then this should be supply zone. Now, the way it works is that we want a situation whereby we identify where there is so much impulsive movement in the market, and then we have to identify the direction of that movement. For example, after an impulsive movement, all right, all we need to do is first of all trace where the movement started from. That should be your demand zone. Now, remember I told you guys it has to be in alignment to the direction. Now it moved to the upside, meaning there is more demand of this asset, and I'm on Euro, I say US dollar right now. So what we need to do is first of all trace the origin of that move. Then we have to take a look at, of course, the price action before it. Sometimes it is usually consolidation like this before this impulsive movement to the upside, or sometimes it is usually a retracement to the downside like this, all right? Then before this impulsive movement to the upside. Now, this is what we refer as demand, all right? This is the demand zone. This is the zone that the market pushed to the upside. Then alternatively, supply zone like this, all right? Now, it is called supply zone because obviously this is the zone that the market started pumping to this side of the market. Now, this is a bearish movement, right? Which means there is more selling. And more selling means more supply, okay? All we need to do is trace, of course, the origin where the supply started from, which means where the selling started from. And we usually know it by reading the characteristics or the price action before the movement. And like as I said earlier on, sometimes it's usually consolidation, because consolidation means no side of the market is dominating. Now, after this consolidation, then all of a sudden, one side of the market dominated. In this case, the sell side. So it is very, very good that we identify where the selling started from. That is how to know supply zone in the market. Now, the way we trade it is very, very simple. Remember, by default, the market is historical in nature. So the past, the market always remember the past. Now, it is good that after we have identified where this buying pressure started from, then when the market start retracing back to it, it is very, very good we pay attention to this zone, all right? Because what happened in the past can also happen right now. That is the mindset of how to trade supply and demand. And most cases, when price get to this zone, then what happened in the past will happen again. But this time around, as it start pushing, it's going to push above this level where it got to. Now, this is generally how to trade supply and demand zone. Now, what I'm doing in this video, remember I told you guys, I'm here to help you guys increase the win rate, all right? Now, this is the general pattern to trade supply and demand. But in this video, I'm going to help you guys to see how you can refine it, all right? Because most of the time, this pattern does not necessarily work all the time. For example, price does not necessarily have to come back all the way to this point before they start pushing to the upside, all right? Sometimes price could just get to somewhere here, and then from this level, they start pumping to the upside. So what I'm going to teach you guys is how to be able to tell if price will get to this level, this demand zone, or if price go to get to halfway and then start pushing to the upside. Then the second thing I want to help you guys with in order to refine this strategy is this, all right? Sometimes, despite the fact that we have identified the zone that the market used in the past, sometimes when the market get to this place, I know a lot of people will start pressing the buy button, but sometimes the market does not use it. they just break it to the downside, and many people are going to take a loss. Don't worry, we are going to solve it in this video. How to solve this one is very simple. We work with entry confirmation. So we want to be able to tell that, okay, as market has gotten to this demand zone, we need confirmation for us to work with it. If not, we are not going to engage. Now, the way I just explained about demand zone, the same thing for supply zone. All right. So supply zone, when price get to this place, then they start going to the downside. When price come back as a retracement to this supply zone, then they start dropping to the downside. That is the mindset. And remember, I told you guys, I'm still going to refine it in the condition whereby price never got to this place. So we can also use it halfway and then get our entry. Without wasting time, let's dive back into the chart and then let's take a look at example. I'm going to give you an example of what I just explained. Then we're going to go straight to the refinement part of it. Now, the first example we'll be looking at is this one right here. Okay, the market expanded. This is much demand in the market. And this is one thing I want to let you guys know. When you're working with a particular time frame, stick to that time frame price action. All right. So as we have seen demand zone right here, we don't need to go to another time frame to start looking at it. Just work with this time frame you are working with. And right here, I'm working on 1 hour time frame. Okay, so 1 hour time frame. This is the time frame I'm going to execute the trade. And usually stop loss is usually below the level of your demand zone. So the first thing we do is identify the move. All right, so this move to the upside, this bullish move, this is the demand. Okay, now it is very, very custom that when price return back to it, then we use it as our level of reference to engage the second time. Okay, how do we know that this is this demand zone? Remember, I told you it's either consolidation or retracement. This is a retracement. Okay, price retrace back, and then after this much price action right here, we saw a sudden movement to the upside. Now, this sudden movement to the upside, this is the demand zone. Okay, so after this move to the upside, it is good that we trace it, and the way you can identify it is using the last down candle, which is the other block. All right, this will be your demand zone. Okay, you can see extend it to include this fair value gap if you want to get more entry. All right, this is fair value gap, is this candle here. So this is your entry when price come back to it. Then another example I want to show you guys, this one we are going to come back to it as form of refinement. Remember, I told you can see some level, like here could be a demand zone, here could be a demand zone, but the market didn't use them. But this is another example. Let me take this one off. This one is not included. So this is another example. After this retracement, then this is the last down candle before this move to the upside, which is the demand. Right, it is very, very good that we have to identify it ahead of time as price come back to it as retracement. Then this is going to be our entry. Okay, so now I don't want to waste the time showing you guys countless example. You can just go to your chart, back test all the examples. But what I want to talk about now is how about zones like this where the market never came back to? How about this one right here? Where is it? This one right here that the market never came back to. How do we capitalize on the move, hereby making more profit? Now, this is how I want to explain it. This is where ICT concept now come in place, and this is where ICT concept now gain momentum, gain power. So the only concept I want to introduce to this supply and demand zone that's going to help you guys make better result is the time of the day. All right, let me put it out right here. So you can see my chart. This is an indicator that shows me the different section of the market. The name of the indicator is ICT key zone bosses. Okay. Now, when looking at this, each of these yellow and green shaded area represent each trading day. Okay. This is a trading day. This is a trading day. Of course, this is Monday. This is Friday. Now, this Monday price action, all right, because you are a day trader, you should come to the market to trade. So this is Monday. Now, you can't wait for Monday to come back all the way to Friday demand zone before you start placing the trade. So what we do is, after we have identified the session of the market, like this London session, New York session, we go to lower time frame. Let me identify the date. This is 6th of October. You go to lower time frame, like 5 minutes time frame. Then on that trading day, for example, that Monday, you start looking for demand zone within that lower time frame on that trading day. Let's go to Monday price action, guys. Okay, so this is Monday, that price action I was talking about. Now I am on 5 minutes time frame. So what I need to do right now is, this is so good, guys. Now what I just need to do is identify the demand zone right here. Very perfect. Very, very, very perfect. How do we know demand zone? Remember, I told you guys, after a consolidation or a retracement, this is a retracement. Okay, before this push to the upside, this demand push to the upside. All right, then what we need to do is just wait for price to come back to it. Now it would have been here, but it never came back. It would have been here, but it never came back, and then all of a sudden here. Now once you get this move, and working with session of the market, you have higher advantage. Trust me. And you saw it during this New York session, price came back to the demand zone of London session. Then it becomes a high probability trade, just one-way movement. All right. Now all you just need to do is press the button and then start buying. Meanwhile, somebody is waiting for the market to come back to, of course, the demand zone of Friday price action, which is this one here. Somebody is waiting for price to come back here. Meanwhile, you have gotten your entry right here, and then you are on the move. This now just talk about now. You can do it on each trading day you want to trade. Use lower time frame demand zone. If price unable to get to this higher time frame demand zone, then the last thing I want to talk about is what if price get back to this demand zone, and then we are looking for entry, and then it break to the downside. How do we avoid it? Remember I told you guys we want to use confirmation. Confirmation is very, very good as a trader. You don't just jump into the move because price has come back to your demand zone or come back to your supply zone. All right. So how to deal with this, all right, is working with confirmation. The best confirmation I can give to you guys, which I make use of, is working with engulfing candle. All right. We need an engulfing candle inside this zone, inside this demand zone. We need a candle that tells us that, okay, there is more sponsorship. Remember, before this demand zone occurred, before this move to the upside, there was an engulfing candle here that triggered it, which we are, of course, that's what we are referencing. So before this new move will take place, this new demand zone will take place, there will still be an engulfing candle, which is our original signal, which is the confirmation. So you wait for example, let's go back to that example I showed you guys on 5 minutes time frame on Monday price action. Okay, let me bring out the indicator. So using 5 minutes time frame, I'm right here on 5 minutes time frame. You see, before the move, before the entry, there must be an engulfing candle. Let's assume you are using this entry. Okay, this will be the one I will use if I was the one. This will be my entry right here. After the market has closed above this candle, let me turn off this indicator now. Okay, you see this black candle. After the market has closed above it with this green candle, then this is where I can be confident to place the buy button. If not, it's possible for this thing to keep pushing to the downside after this black candle has closed. It's possible, trust me, all right? And if you miss this move, the moment it came back again, of course, this is another engulfing candle. The moment price closed above it, you see, working with engulfing candle inside the zone, you stand at higher chances of winning that trade. And one more last thing I'm going to tell you guys before I end this video is that when working with supply and demand strategy, please make sure you are in alignment with the overall trend of that market. If you take a look, I'll be giving an example of demand ever since, because the trend of this market is bullish. You don't want to go and looking for supply when the overall direction of the market is bullish. All right, you are going to lose so much money. For example, somebody that will come back here now to say, okay, this is a supply zone for a sale. You just want to burn your money. So you don't do that. So if it's bearish market overall direction, then you should be looking for supply zone. Then if it's bullish market overall direction, you should be looking for demand zone. I believe this video is going to help most of you guys, especially those of you that are new to this program. If you are new to this channel, please don't forget to subscribe. Please don't forget to subscribe. Turn your notification button on. I'll see you guys next upload. Peace.